You have taken the initiative and gotten your estate planning documents done. Now we're going to take you through the 3 mistakes that you can make if you don't do this properly. Welcome back to another episode of Playbook of the Wealthy. My name is Dave Grant. My co-host is Heather Townsend. We're in person. This is weird. We've hugged for the first time in months, so you didn't need to know that. But anyway, we are talking about the mistakes that you're going to make with estate planning if you don't follow the things that we're going to tell you here.
Wait, can't I do my intro?
Yes.
If you have spent thousands of dollars on your estate documents and you don't do what Dave and I are going to talk about today, then it was pointless that you spent the thousands of dollars. I had to just really get that across.
Good.
I'm very animated about that. It makes me upset.
Keep it together. All right, we usually do this halfway through the episode. I have flown in person. I've been on a plane. I have stayed in not my home, so that means that you owe me something. It's a like, it's a comment, it's a subscribe, a follow, send it to your mom and put it in the boys and girls group chat. Don't care what you do. Do something, and I see them all. I'm following you. Welcome to the podcast. Let's dive in. All right, Heather, take us through the first one.
First one?
Yep.
All right, where this started was Dave and I actually just got our estate documents done again. Weirdly enough, we didn't even talk about it, and we realized we were both doing our estate documents, redoing them, I should say, updating them, and we were like, we need to talk about this.
Mm-hmm.
That's where it started. So most people, I will say, get revocable living trusts, and I'll just define revocable living trusts. That means you can change them. It is really important that you fund them. So if you go to the lawyer and you spend thousands of dollars, let's say $3 or $4 grand is a typical cost, maybe 5, right? Wouldn't you say? And you don't fund the trust, your family would still go through probate or something to you. Dun, dun, dun.
You're such a nerd.
Thanks. I'm proud of that.
So I think when people are hearing about estate planning documents, they think they're one and done. The funding doesn't really come into the conversation too much.
Mm-hmm.
So can you run us through what funding it would be like?
Real estate. That's important. Normally the lawyers, I've seen, I don't know what you've seen in your experience, but normally the lawyers file the deeds for my clients and myself.
Yeah, I think the DIY people who do the trust, not with an attorney, have a more difficult time with this, but the attorneys typically are really good with deeding it into the trust.
And while we're on real estate, I want to share a story of where this actually affected my family before I even got into financial planning. My dad's brother, my uncle, sadly passed away, and he had property outside of Arizona. Mm-hmm. And it was in multiple states, and he didn't put that property in the trust. What do you think happened, Dave? You know what happened.
They didn't have a party about this scenario. Yeah, you're doing probate in various states.
It was very expensive. Mm-hmm. Tens of thousands of dollars. Instead of going to the family, had to go to lawyers because it just didn't get titled in the trust. And it's not really difficult. Normally it's just a form. Financial advisors can help with it. Lawyers can. It's not a difficult thing to do. Mm-hmm. And you normally just supply the trust certificate. Normally when you get your estate documents, I should say that too, that's another good takeaway, is normally I always try to just send my clients trust certificate because it doesn't have all the personal information, and it's normally like 2 or 3 pages. And you fund it. It's not a complicated thing. And it's normally the other thing with a revocable living trust. And why you do this is it keeps things out of probate. So if my uncle had put the real estate, tens of thousands of dollars wouldn't have been paid for, and the family could have gotten the assets much sooner. It took like years to get through it. That's the other thing. It's really painful for families to go through that if you don't fund it.
I think the executor gets screwed in all of this because they're the one on the document, and they have to travel between states to try and figure this out and get attorneys in place to figure out probate in different states.
Well, and you're mourning the family. Like, it's emotional. Right. You're sad. You're like, whoever passed away. It was awful. I'm dealing with lawyers trying to help my family out, and I'm sad. And it's icky.
Yeah, and it's a quick fix.
It's really quick fix. If you have retirement accounts, so IRAs, 401ks, or life insurance, those types of things that have beneficiary designations where you list a beneficiary, you need to be asking your estate planner what those beneficiary designations should be. Typically what I see is spouse is first if you're married, and then contingent or second is the trust. Is that what you see too, Dave?
Mm-hmm.
And mind you, I should also say as a disclaimer to protect me and Dave, we are not lawyers. We are just sharing what we see, okay? You need to ask your estate planning attorney.
Don't worry, the disclaimer will be 7 minutes long on this video.
Okay, yes. All right. And then secondly, if you have bank accounts, taxable brokerage accounts, meaning they're not in retirement accounts, but you just have an investment account, those are normally titled in your trust. So it says, my investment account says the Townsend family trust dated blah, blah, blah. Mm-hmm. But anything that is not a retirement account or life insurance should be titled in the trust. Let's talk about the non-fun stuff. In estate documents, there are typically wills, power of attorneys. This is really important that you prepare when you go to an estate planning attorney. Who would you want to be making your financial and medical decisions on your behalf? And they can be different. Someone could be different for financial and medical if something happened to you.
I think the part where people start to trip up is they just leave them. They think it's a one and done. And they think, okay, if I'm naming this person as my agent in my power of attorney or an executor in my will, I'm good. I don't have to look at this again. And that's never the case.
Do you mind sharing why you just changed yours?
It's mainly the people that we have named in documents have moved. And so if I'm talking about guardians for my kids, I'm not going to take them through that. If their dad and their mom die and now they're shipped off to another state, that's going to wreck their world entirely.
You wouldn't want to do that to your boys.
Yeah.
No.
And they're 15 and 13 at this point. So they are getting closer to the point where, okay, I mean, for the 15-year-old, high school is important. You don't want to rip out of that. And it's so many social ties. And 2 years away from going to college where this actually doesn't matter anymore because he'll aged out the document. 13-year-old, there's still a long road. So we changed it and changed the people who were going to be responsible for them to be people that were very close, no changing school, no nothing.
I completely agree. I had my mom and my aunt in there. Lovely people, but my mom is sick, as we all know. And, my aunt is older. I mean, she's not old, but it's just, with who I put as my new guardian for my kids, mm-hmm. I wanted them also to be able to make financial and medical decisions for me.
Yeah.
Pretty much my best friend is screwed if something happens to me. She has to make my financial decisions. She's my trustee, or she executor of the will. And she has to make some medical decisions, financial decisions, and she's taking my kids.
It's funny who gets put in those decisions. We have a doctor in the family. I think they're the power of attorney agent in healthcare documents for every single family member.
Makes sense, though. That's perfect, though. We don't have a doctor, but that is a great way to think about who should be it. Do you know that I actually am paying my best friend like a gift to manage my estate because I feel so bad if I'm like, here's $100,000 that you get if I die.
So you're last to go, then she gets paid.
Yeah. Yeah.
Alex better sleep with one eye open at that point because she's looking to get paid.
No, I'm lucky. She's a very good best friend. So I think thinking about who you list is really important. And if you have kids, you should have estate documents. Mm-hmm. I'm very adamant about that. I think people get all ready to have kids and then they don't get their estate documents. Do you want the courts deciding who takes care of your kids?
It's crazy to think about.
Isn't it?
Like no one has a say and it's a judge.
That would scare the bejesus out of me if something happened to me. Mm-hmm. I know it's not fun having those conversations, especially some of the questions that the lawyers ask you of towards end of life. Mm-hmm. It's not fun. But the peace of mind that I feel knowing that my estate documents are really good for my kids if something happens to me, you can't put a price on sleeping good at night.
Mm-hmm. That's a big one. I think it also comes into play when people are not reviewing it when family members are getting old. So if you've named an executor or an agent in your healthcare document and you don't look at it, and let's say that person then has dementia. If you die, that person is now listed. They're legally required to then either make decisions on your behalf or they are taking care of your estate. Wildly inappropriate because you didn't update it.
Yes. And so let's go into that. Outdated documents. I see mostly wills, right? Mm-hmm. Is that what you see? Yes. And the sad thing is I've been reviewing clients' estate documents. So I'm like, who's this who's this person that I see listed? I've never heard you talk about them. Oh, he passed away a few years ago. What?
Yeah.
Like, we need to update your estate documents. Like, and sometimes I'll see these trusts like 20 years old. And I know stuff has to change in that. It's most of the time. What else do you see that?
The fun ones I've seen are people bring out their paper wills and they've chicken scratched on it. Like they've scratched out the dead people in there, or they've written a note on there saying, I don't like her anymore. I'm like, you realize that doesn't legally stand up. Just your chicken scratch. You have to do this with a lawyer. And they're like, no, I didn't know. Like, yeah, your word doesn't matter at this point. Take it to a lawyer, get it fixed.
Yes, 120% agree. Okay, so how do you deal with helping your clients fund estate documents?
There's very much a end of engagement with attorneys.
Yes.
It's, here's your documents. If you've got a house, we'll do your deed and see you later.
And here's a list of what you should do. But then it's confusing too, how they list it, because it's lawyer jargon.
Mm-hmm. One thing I do is I actually do a report for clients, which is an estate profile. And it lists out all their assets and all their documents, how it's titled, and if there's beneficiaries, who are the beneficiaries. Mm-hmm. And we go through it together. And sometimes they'll see there's blanks because either I don't know or it's not on there. And if they've spoken to an attorney recently, then it's a case of, okay, did you talk to the attorney about this? If not, let's talk about it together and then get an attorney's opinion on who you should be leaving this to. And it is rare to see someone who has got this report for the first time to have zero gaps or zero mistitling.
120%, yes.
And I split it out into probate and non-probate. And some people are like, I just met with an attorney, I'm good. I'm like, your probate estate has now triggered state taxes or the state process, and it's now going to get messy if you don't start retitling things. And so having that visual is something that they enjoy, and it very much cleans things up pretty easily.
It's a really big pain to put your checking account in your trust because it changes normally the account number.
It's the biggest annoying thing that clients have to go through.
Well, I don't do that. What I do,
Interesting. Okay.
Yeah, with my banker is he says just do POD, TOD. So our checking is actually payable on death or tax or transferable on death to my trust. So I didn't have to change the account number. And then our savings account is in the trust. And why that's so important to have bank accounts in the trust is if your house is in the trust, guess what happens if you sell the house and you don't have a bank account in the trust? Because guess where the check is made out to?
Take us through it. I haven't heard of this before.
Oh my gosh. So if you're in, the title will make the check out to the trust, but if your bank account is just you guys and it's not the trust, it can't get deposited. So you have to have a bank account in the trust. So that's why, at least it's what my banker has told me. So I always make sure my clients have one bank account that's titled in the trust and not just TOD, POD. And I've actually had a check made out to my trust, and if I deposit into my checking, sometimes Chase will flag it and I'll have to go deposit into my savings. How often do you think people should review their estate documents?
Every 5 years.
I agree. You know what's so weird about that? I laughed. When I first wrote my estate documents, I was like, I'm not going to need to redo these in 5 years. Like, what's going to change? So much changed in 5 years. It's exactly 5 years on the dot that I changed mine.
Well, now you have to ask me how long I actually left my estate planning documents before I changed them.
How?
13.
13 years?
Yes. I got
That's really good.
My kid was just born when I made them. And then I changed it when he was... Oh, so it's actually 15 years. It's not even 13. I thought about it 13 years and changed it at 15.
Oh, so you did what most
clients do.
Yes,
yeah.
Yes. That's why you need accountability.
Thank you.
You just have to tell me, and then I'll just bother you on our podcast whenever you need to do things. You know that.
Do your bow.
Okay, Bo. If you have estate documents, you have to fund them and make sure you know what those funding instructions are from your lawyer. So let's go through this. If you have retirement accounts, IRAs, 401ks, make sure what your beneficiary designations should be. I have typically seen that if you have a spouse, the spouse is primary, and then the trust is contingent or secondary. If you don't have a spouse, then typically primary is trust. If it is not retirement accounts or life insurance, then it needs to be titled in the trust. Or do transfer on death or payable on death, one or the other to the trust. That includes bank accounts, investment accounts that aren't in retirement accounts, real estate, outside real estate, and then LLCs. When you are setting them up or have them, make sure your lawyer tells you how you should list them, who the member or manager, depending on how you set up your LLCs, should be, so that it's also. How did I do?
Nice bow.
Thanks.
All right, we're going into our next section. This is called, What Would You Do? This is the question section of the podcast. So if you just sat and you listened to this whole podcast and you realize I did not retain anything and I only learned by questions, we have got the section for you. 3 questions, all based on the content that we do. Ready, set, go.
Most of the executors named in my will are getting older, 70 plus years old. At what time should I replace them with younger people or family members?
This is a good question. A lot of older clients have people that are originally named in their documents and they've not reviewed it. I would say you got 2 things to look out for. One is going to be, do you know that they are of sound mind? If they are, you've got a little bit of time. I would still recommend changing it to people who are younger, but you don't have to make this an immediate change. If you have people that are, trying to say it nicely, advanced in their aging, you should be changing documents and changing names tomorrow. You should be calling that attorney and saying, this person needs to get out. Because as soon as you die tomorrow, because that's what you're attempting here, that person is then going to run your estate and it's not going to work well. Question number 2. I just bought a second home and I'm thinking of making it a rental property. Does it go in my trust or should I put it somewhere different?
Typically, I like rental properties and LLCs for asset liability protection, meaning, and again, not a lawyer, but this is what I've seen lawyers recommend, is you put it in the LLC, and then the LLC, the way they set up the LLC is in your trust.
Okay.
Or the member is in the trust, or again, lawyer. But that's what I've seen.
Okay.
I don't like it in your trust because then if you get sued, your personal assets could come.
It's going to be simpler if you're not doing a rental property, right? If it's just your second home, you don't need the LLC.
Trust,
yeah.
In the trust, yeah.
Okay.
So my husband and I did our estate planning a few decades ago and have 2 trusts. I think the lawyer called them Trust A and Trust B. Is this still appropriate?
First of all, way to go for remembering Trust A and Trust B. That's actually a legal term.
It is.
From back in the day.
It is.
You've got estate planning documents that are most likely outdated in their strategy. What has happened over the years is the limit that the federal government allows you to pass between spouses and between family members has dramatically gone up. So you are not going to get the best use out of those trusts. So what I think you should do is you could go back to an attorney and say, I've got the AB trust. Do you suggest I do anything different? Most likely they're going to say yes. Granted, I'm not an attorney. I can't speak for them. But you're going to have a much simpler estate plan if you then change it away from an AB trust. You may have a need for an AB trust. I don't know your situation. But for the most part, you're likely going to get away with having something a lot simpler.
I recently had one in the last year because of a business owner client where their valuation of their business is just increasing so fast that it is very possible that in the next 5 years, we could be over the estate planning limit if one of the spouses passes, right? Mm-hmm. And so the lawyer actually put it in if taxes come into play, the AB and trust comes or something like that.
That's so nice wording.
It can still come into play. But I think if it's in there and your wealth isn't going to keep rising exponentially, you're making it more complicated. It needs a review.
Yeah.
Go to a lawyer and review it.
All right, going into the final section of our podcast. This is called Highlights. This is where we tell you our personal win or our favorite part of our week that we've just been through. I have had 2 conversations with clients recently where they've not asked for permission, but they've almost said, is this okay to do?
I love when that happens. It's okay.
The power that I feel when they ask me that question. Like, no, you cannot do that. But it's pretty much always yes. And so it's that feeling of, our business is growing. Can we buy this property? Like, you should have bought it last year, but yes, go ahead and do that. Or we're thinking of a second home. Do you think it's wise? Of course it is. The amount of memories, you've got the money, go and do that. But it's the fact that it's that nice feeling of saying yes versus no.
I love when I get to say yes. Do you know what I hate more? I really don't like is saying no. Mm-hmm. And actually going into this, so my personal highlight is that I just got asked to speak for a client. It was really cool to be able to travel and share my knowledge. I feel like I haven't done that in a while, and I don't really work around a lot of people, right? I mean, we're advisors. My employee lives in California. Like, I'm on Zoom every day. I mean, I'm around people all day, but I'm not physically around people. And it was really interesting that I'm sitting with and especially with you in town, and my employees in town, Lisa, like, being around people is really energizing to me.
Yeah.
And I'm like, wait a minute. There's going to have to be some switch I'm going to need to make, because I feel really good being around all these people. But anyways, it felt really good to be asked. I was so nervous before, and you know how you always like, almost, I don't know if you're like this, but I almost like wasn't positive in my head, which I shouldn't have been. And then I ended up, I think, doing really well, which is always how you want to end it up. Sure. I'd rather it not flop.
You want it that way than the other way.
Yes. But I was like, why did I have to be so negative in my head going into it? Like, why? But anyways, it was funny. She shared a story and she uses the word no. But then I go, did I actually tell you no? And she was like, no, you actually told me all the ways I could do it, and I didn't like the ways. I love how she said it.
That's a good one.
Yeah, I try not to say no. I try to just give the facts to the client of, this is how it would be if you did this.
You're leading them to the decision.
Yes. Yeah.
I like that.
The open manipulation that I do. Yes. Yeah.
All right. If you think that Jordan is not here to give you a disclaimer, he's coming at the end. You know he's coming. All right. But thank you for listening to this episode of Playbook of the Wealthy. If you watched it, way to get a different viewpoint of us. If you do want to listen on the different ways to listen, Spotify, Apple, anywhere you listen to your podcast. If you want to watch it, YouTube is going to be the best place. This is where you're going to get a random sound effect every once in a while, and you're not expecting it. If you want to send us a message, you can send us an email at hello@playbookotw, and we'll see you next time.
Wait, I really love the questions, if you guys don't know this already. So please, or y'all, if you haven't noticed. I really want more questions. Send more questions. I love them. Okay, now you can end.
Heather's end is usually toodles, but seeing as she disrupted my ending, toodles.
Toodles!
All opinions expressed by Dave Grant and Heather Townsend are solely their own opinions and do not reflect the views of their respective wealth management firms. This podcast is for informational purposes only and should not be relied upon for investment decisions. Nothing in this material constitutes a solicitation for the sale or purchase of any securities. Clients of Retirement Matters and Townsend Financial may maintain positions in the securities discussed in this podcast.